Good day, Junior Tickies. I'm Mrs. Primacombe. We're going to look now at Chapter 3, Cash Journals of a Service Business. Before we start with this chapter and this activity, we're just going to go back in what have we done to this point. In Chapter 1, we focused on accounting theory. It is imperative for you to make sure that you understand the accounting theory. You cannot apply it if you don't understand it. So make sure that you go back at any stage. If you are not sure, go back to Chapter 1. Now, in Chapter 1, you've learned about the accounting cycle. And we said the first step in the accounting cycle is that a transaction takes place. There are different types of transactions that we are going to look at in accounting. There's cash transactions, there's credit transactions, and then there's returns, for example, by customers, returns by the business. So there's different types of transactions, and all these different types of transactions is the second step in the accounting cycle. There needs to be proof, evidence of that transaction that took place. And then the third step in the accounting cycle is we take that to the subsidiary journal, to that specific journal. And in accounting, we've got 10 different journals. And we only now beginning with the first two, and that is looking at cash journals, cash receipts journal, when the business receives money, cash payment journal when the business makes a payment. And we're only going to look at a service business. And if we go back, what is a service business? A service business means that we've rendered a service, and our main income from rendering services is called fee income, or another word that we use, current income. So this activity is going to focus on the cash receipts journal only. On the 1st of January 2024, Aubrey Murray established a new business, Rent a Tent. His business rents out tents. Here are the transactions that took place in the first month. So, required, record the transactions in the cash receipts journal for the month of January, and then 1.2, indicate the influence that each of the following transactions will have on the accounting equation. So if we look at the transactions now, all of these transactions is the business received money. And when the business receives money, that must be taken to the cash receipts journal. So we always start with the heading by saying cash receipts journal of, what is the business name, Rent a Tent, which month, January 2024, and then we say this is cash receipts journal number 1. Before we start with the transactions, just to get a better understanding of the journal itself, we start with document number. And when we look at document number, there's only 3 options that you could potentially have in a CRJ. The first option is if the business receives money and it's paid directly into our bank account, if the business receives money through electronic fund transfer, so it's paid into our account, it means that our source document that we will use is bank statement. That is the reference, the evidence, the proof that we are going to use. The second option, if the business received an income, for example, we're renting out our premises, we've received an income because of commission that we've received. We've received money for whatever reason that could be, and we've issued them with a receipt. That is our second option, is duplicate receipt. And why duplicate receipt? The customer always gets the original and the business keeps the duplicate as evidence, as proof. And my third option, and this is when services are rendered. When services are rendered, it means that I am going to receive money. And then that evidence as proof that the business received money that we use is called a cash register roll. So those are my options. Yes, you do have a cash invoice. A cash invoice is there in a service business especially. If I don't have a cash register roll, I will issue the customer with a cash invoice. That money is paid to us immediately. It's not money that is owed by this customer and they can pay us only later on. We will issue them with a cash invoice and they need to pay us for the services that was rendered. So these are my options when we look at the document number. Day, on which day did the transaction took place, details, from who did we receive the money, analysis of receipts, how much did we receive during the day. At the end of the day, we draw a line and we deposit that money into our bank account. Then we're going to say, we've received money, bank is debited, always from the cash receipts journal. Why did we receive the money? And that's when we start having these columns. We've called them money columns. So they can tell you, you need to open up the following, or it can be given to you. And if there's no money column open for that specific money that you've received, then it goes under sundry accounts. So we're going to look at this now by completing the transactions so that you can have a better understanding. The first one says, the owner deposited 100,000 as his capital contribution in the current bank account of the business. This means that we start with the source document. This will be bank statement because the money was paid into the business current bank account. This happened on day 1. From who did we receive the money? When we say the owner, and they've given the name of the owner, that was in the instructions when we started with this activity. Then you have to write the name of the owner is Aubrey Marie. How much did he pay into the business account? 100,000. For what reason? For capital. We don't write capital contribution. This is shown as capital. On day 7, cash received for tents hired out according to the cash register roll for the week 12,800. Source document, cash register roll. On day 7, from who did we receive the money? There's no name. That's why we've written it down now as services rendered. How much did we receive? Now we have to take it to analysis of receipts. 12,800 was received on day 7. There's no other transactions on that day. So we draw a line to say how much did we deposit in our bank account? 12,800. For what reason? Fee income. On day 20, a loan was taken out from Capitec Bank for 50,000 at an interest rate of 12% per annum. The money was paid directly into the business bank account. On the same day, cash received for repairs done according to the cash register roll, 15,000. So there's now 2 transactions on the same day. So starting with the first one, the loan was taken out. I don't care at what percentage we're going to pay back that loan with the interest, 12% per annum. All I need to say now is that the business received money. My source document will be bank statement because that money was paid directly into the business bank account. From who did we receive the money on the 20th? From Capitec Bank. How much did we receive? It goes directly to the bank. 50,000. If your source document is bank statement, directly into bank. Why did we receive the money? Because of loan, Capitec Bank. On the same day, repairs was done. Cash register roll is my source document. I don't need to write the date again. Why did we receive the money? Because of services rendered. Now I have to take this to analysis of receipts. We've received 15,000. There's nothing else happening on that day. So we draw a line. How much did we deposit in our bank account? 15,000. For what reason? Fee income. Then we've got on day 25. The bank statement received from Capitec Bank showed interest on current account 145. So we've received money from Capitec because we had money in our bank account. We've received interest on that money. And that is an income to the business, which we need to show. The source document will be bank statement. From who did we receive the money on the 25th? So you have to write the name of the bank, Capitec Bank. How much did we receive? 145. It goes directly to bank because my source document is bank statement. And then for what reason? This is called interest on current account. When we are done with the transactions, we have to total all the money columns starting from bank. You do not add analysis of receipts. We start from bank, and when we add the total for fee income, the total for sundry accounts. Remember what I said earlier in the activity. From the cash receipts journal, bank is always going to be debited. That means the rest of it will be credited. So if I add those two together, it should equal the total of bank. If it doesn't, it means somewhere you've made a mistake. The next part of this question is completing the accounting equation. So you can use the same transactions and then complete it different format, practicing either the journal or the accounting equation. So if we look at the first transaction, the owner deposited 100,000 as his capital contribution into the current bank account of the business. If we're looking at this, now I'm not going to do the T accounts. I'm going to show you another way to complete this. We can use this as a tool. Date, click. D for debit, E for expenses, A for assets, D for drawings, C for credit, L for liabilities, I for income, C for capital. And then you should know that all these expenses, assets, and drawings will always increase on the debit side, which means if it is credited, it will minus. And if I look at liabilities, income, capital, it will always increase on the credit side. That means if my liability is debited, it will be minus. If my income is debited, minus. If capital is debited, minus. If you look at owner's equity, remember in chapter 1, we went into this and we said, income will always increase on the credit side and will decrease on the debit side. And how does that affect your owner's equity? If my income increases, it will have a positive effect. If it decreases, it will have a negative effect. If I look at expenses, it will always increase on the debit side and decrease on the credit side. So when we look at how that will impact the owner's equity, if my expenses increase, it will have a negative effect. Why is that? The interest that the owner has in the business is the profit. How do we calculate profit? Income minus expenses. So if our expenses increase, our profit will be less. That will have a negative effect on the owner's equity. So make sure that you understand that. So if I look now at the owner deposited 100,000, the business has a favorable bank balance, which means bank will be debited from the CRJ. Bank is classified as a current asset, which means now capital is going to be credited, double entry principle. For every debit, there's a credit. Capital is credited, which means that my owner's equity is going to increase. Assets is going to increase. Liabilities, nothing. Day 7. Cash received for 10 hired out according to the cash register roll for the week, 12,800. From the cash receipts journal, bank is always debited, the rest is credited. That means fee income is going to be credited. Bank is an asset, which means it will be debited plus. Fee income is an income, which will increase, which will have a positive effect on the owner's equity. Nothing happened with liabilities. On day 20, A loan was taken out from Capitec Bank for 50,000 from the cash receipts journal. Bank is always debited. Account credited, loan, Capitec Bank. You have to write the name of the bank. Bank is a current asset, which will be plus. Loan is a liability, which is credited, which means plus. Nothing happened with your owner's equity. Liabilities plus 50,000, assets plus 50,000. On the same day, cash received for repairs done from the CRJ, bank is always debited. Account credited, fee income. Bank is a current asset, which is debited, which means plus. Fee income is classified as an income, which is credited, which means it will have a positive effect on the owner's equity. Nothing happened with your liabilities. On day 25, the bank statement received from Capitec Bank showed interest on current account 145. This means from the cash receipts journal, bank is debited, interest on current account is credited. Bank is a current asset, which is debited, plus interest on current account is an income, which is credited, which means positive effect on the owner's equity. And nothing happened with your liabilities. Thank you very much. I want to leave you with this quote: the future depends on what you do today. Have a wonderful day.